Hey traders and investors, it's Serge Berger here. Let's have a look at Netflix. Netflix, of course, earlier this week reported its latest batch of earnings, and the reaction so far has been negative, and I would expect some more downside to be had over the coming week or so. Let's have a look, or the coming weeks, I should say, or so. Let's have a look at where we are. First of all, let's keep in mind very sharp rally, of course, since 2012. And that in 2015, so last year, gave us a couple of overshooting moves that quickly got rejected, and sort of, at the margin, gave us a double top formation that has ultimately led us to break this what has been a rising wedge formation through a technical lens. Let's so that's the big picture perspective, and of course that does mean that we do remain in some sort of an intermediate term corrective phase. Let's have a look at this a little bit closer up on the daily charts, and what we're going to do is look for some confluence support and resistance areas, and I'm going to quickly get rid of some stuff that's not important. So for example, this yellow line here is not important, but let's get a little bit of perspective. Again, first of all, let's keep in mind that double top that I just showed you, or that marginal double top I should say, and basically what that gave us is sort of a crooked sort of line of support until it broke below there in January. And that's what we always want to look for, guys. It's the most important thing. And I tell this to Clubhouse members every single day. You want to look for confluence supports, confluence areas of support and resistance where multiple or as many things as possible come together, including news. So what we saw here is once the stock broke below this diagonal support line, also quickly broke below its 200-day moving average, which is this red line. All that took place in January. We then washed out into early February, and then we of course had a big reflex rally. Now with a stock like Netflix, it's very common for it to break a little bit above confluence resistance, which is why we want to draw these areas with a crayon as opposed to with a pencil. So what we have here is the 100-day moving average in blue, the 200-day in red, and you can see it roughly lined up with the diagonal area of resistance. Now, what's important to keep in mind is, you can draw this line a little bit more like this, and you see we had a marginal break above this. Now, that's very common to happen for any stock, for that matter, to kind of squeeze out some shorts in this case that were caught and had their shorts, their stops too tight. But what happened more importantly is that we're now after earnings. We quickly gapped lower earlier this week, and we're back below all this entire layer of resistance, back below the 100 200 moving averages as well. So this area got rejected. It also matched up, so with a 61.8% Fibonacci retracement area. So from the December top down to the lows in February, we then retraced 61.8%, which is an important Fibonacci measurement. So all that stuff lined up, and I would suspect that because this was such an important lower high versus this high up here, that we would see some sort of follow through. So what I'm looking at here is some cheap put spreads. I think implied volatility is now cheap enough that we may be able to put on some sort of a trade that over the course of the coming weeks or so, it gets this stock closer back down to the low 80s area, which would be sort of a retest of those February lows. So that's sort of be a next downside target. Any sharp reversal back higher here, any filling of this gap here, down gap from earlier this week, would certainly negate that trade fairly quickly. So that's what I'm looking at here. Again, confluence resistance does seem to put the path of least resistance for Netflix to the downside. Again, this is just because we remain in intermediate term corrective phase. So that's it, guys. Please like this video. That's how I move up in YouTube ranks. You would do me a big favor if you could give me a like. And otherwise, I will see you in the next video.